Chaz. It's a Saturday morning at 9:56. I actually recorded this video yesterday, and then as it was rendering, we had a power surge, and I lost fucking everything. So, pretty pissed about it. So I gotta start all over. I'm in California, so I'm wearing this goddamn mask. Brooke actually got kicked out of Barron's, the little like food place. She got kicked out for not wearing a mask when she was in the checkout line. They were like, "No, you gotta go." So we have to wear these anywhere we go in California, which is lame. I'm not really going to wear this the whole time. I'm just fucking with you. But anyways, no, in this video, I'm going to be going over the April to May, like my swing trade blueprint. It's a newsletter that I put out to my altitude members on, I believe, April 3rd. Last Friday? I don't know. It was last Friday, not yesterday, but the week before. I put out this swing trade blueprint that me and Ben are going to be doing monthly, just like a look ahead at some swing trades we're looking at. Going forward in the next month. This one's obviously called the Corona issue. So we're looking at stocks that we're looking to trade that are directly affected by the coronavirus. I'm going to do that, and then I'm also going to be showing you guys how I set up my daily chart, because you guys know me for the 15-minute. I just draw my levels, and that's how I trade intraday. But when I'm looking at swing trades, I look at the daily chart. And I'm going to show you how we set up our chart, what indicators we have on the chart, and then what I'm looking for exactly when I'm looking for a swing trade play. All right, so I'm going to just do like a brief overview of this newsletter that I put out. Obviously, Altitude Live, April to May swing trade blueprint, the Corona issue. This is just a little like intro. This is just for the members. I don't really need to read that. But our April to May swing strategy. This is just what I wrote. In the coming month, we are looking for essential names that also have corresponding bullish chart setups. Names that have been beat down but are also leading the way as far as reversals go. And we're looking at three sectors when it comes to that. We're looking at the retail and manufacturing side. We're looking at some industrials. And then obviously the streaming market, because everybody's locked in their goddamn house. Also, by the way, I don't care that it's 9:58 a.m. I'm drinking a whiskey sour that I made. I don't know if you guys can see that. I don't know where the webcam's pointed. But I actually made this with a single malt Irish whiskey. I'd never heard of it. It's called the Sexton. I mainly bought it because the bottle was rad. It's black and gold, which matches pretty much everything in my house. But on Whiskey Advocate, Jameson rates like an 82. Tullamore Dew 12-year rates like an 80. And this stuff rates like an 89 on Whiskey Advocate. And it's actually really smooth. I don't typically like Irish whiskey, but this is probably the best Irish whiskey I've had. And I made a proper whiskey sour with it, with an egg white and everything, since it's breakfast. Alright, well, let's get into it. Alright, so the first sector we're looking at is retail. So up here is going to be just my thoughts on it. Above the chart, that's my thoughts. And then obviously the bottom, I'll explain my reasoning on the chart. So first name up is Walmart. And some reasoning is it's doing some of the best reacting as far as replenishing stock goes for the consumers. Like, Walmart's not really out of much anymore, and there's been relative strength. Mind you, this was posted, I posted this newsletter on April 3rd, so we've obviously moved a little bit, but back then it was showing relative strength. And as far as the chart goes, it entered the bottom of the daily supply on April 2nd, and I said if it sustains 118, then it could send us to all-time highs, and I said I could see this happening by April 17th. And actually last week, I posted this 2 Fridays ago, and last week, we actually busted through this and tested this resistance up here at the 125 level. So that was a solid trade. We took that. Ben and I took that. Next up is Target. Target's essentially the same idea as Walmart. However, the name has been a laggard in the essential retail space. And I think it's only a matter of time until it catches up. As far as the chart goes, it was sitting above massive demand in the high 80s. The current price is 94, which is significantly off its 52-week high. But if I think it held holding that demand level, I think it could see 108 by early May. That's what I wrote then, and we actually took some target calls early in the week, Monday or Tuesday. Ben grabbed some at like 60 cents. I think he sold at like $3.40 or $4.30. I don't know, something like that. They ended up running to like $8. So it went like 12, 13 bags. So Target is still a good name that we like. Another essential retail is CVS, and it's also a pharmacy. And I know we're a long ways out on a vaccine for this bullshit. But I think any good news on that front will bring the name into the conversation. So that's why CVS is on my watch. As far as the chart goes, we've been defending the long-term demand in the mid-50s, and it's another name like Target that has taken more of a beating. It hasn't really rebounded as much, and I'm targeting the high 60s by May expirations if we hold these. I don't remember where it closed on Friday, because obviously these charts haven't been updated in a week. I put out this newsletter on the 3rd. And then, is this lastly? Yeah, lastly for retail, I'm looking at Kroger. I mean, it's pretty self-explanatory. Everybody needs groceries. And as the panic continues to set in, like it will, the sales in Kroger are still they're gonna be breaking records. Obviously, like the Kroger and actually where I had to wear this goddamn mask. I went there yesterday. There's still no toilet paper. There was one like 6-pack roll. I mean, I already have some, so I didn't need it. And then they limit you on proteins to two items. If I buy a pack of chicken wings and then some ground beef, that's it. That's the only protein I can get. They limit you to 2 proteins and 2 dairies, and the shelves are still empty. It's kind of ridiculous, but that's California, I guess. All right, next up on the list is going to be manufacturers. And this is actually my favorite space when it comes to these swing trades, is the manufacturing sector. I like 3 names in this space. The first one is PG, and it's basically on the forefront as far as manufacturers of essential goods. They're boosting production, and basically because clean is in, which is disgusting, like it hasn't been, and like all these dirty motherfuckers never washed their hands before there was a goddamn pandemic. It's ridiculous. But as far as the chart goes, obviously we see this daily trend line. We broke this week. Again, this is a week-old chart. So we broke that, but what I saw then, we fought back through the low supply right here, and we're knocking our heads on this daily downtrend. A break of 115 confirms that, and I like it to 125 by late April. Next up is Johnson & Johnson. Obviously, soap. It's literally what they make. It's the most important essential being pushed by the media. Wash your goddamn hands. This, obviously, I didn't draw this, or as the chart, we have a V bottom here, and we almost chewed through the current supply levels. Through that, the point of control lies around 145. It was currently at 133, and I can see 145 by late April, early May. And this was also a downtrend on the daily that I believe broke. I don't know where it is right now. We're not in a position on this currently. And last up is Clorox. Obviously, the sales in this name has exploded. Like its demand, like this name has never seen before. So that's another one I like is this Clorox, and I actually really like this chart as well. So it created a huge supply level last month. This is right here, where we had a tough time breaking. A lot of volume was traded. One second, my dog's knocking at the door. Come on, Scott. Come on, buddy. Sorry about that. My dog's needy. All right, so we created this massive supply in the volume, and we broke through it, and we made these highs, and we came down and we tested this. This is now demand, and we defended this big volume pocket right here. We defended it like fantastically. My target on Clorox is 200 by late April, early May. It's currently 179. I don't remember this close Friday, but I still like those. Again, that's my favorite space to be in right now with this coronavirus is the manufacturing of essential goods. So I like PG, I like Johnson & Johnson, and I like Clorox. All right, on to industrials. This whiskey sour, I'm telling you, is fantastic. So good. All right, industrials. First name up is CAT. Because though we're basically at a standstill, like globally, construction is not. All my buddies that are in construction, they're still building. The machines are still running, everybody's still building. That's why I like this name for the industrials. As far as the chart goes, we have a V bottom, and we're through the short-term resistance, obviously, and we're in that gap. This was, mind you, April 3rd. I don't remember where CAT is currently. But so we have that V bottom through the short-term resistance. The supply levels above are at 125 and 135. I'm looking at May monthlies. Again, I posted this on April 3rd. I'm looking at the May monthlies for a 20-point move in CAT. Next up is Honeywell. Honeywell, like this is just random news, but they're stepping up big in terms of manufacturing the COVID masks. And they're even adding employees to manufacture more COVID masks. As far as the chart goes, there's a beautiful bull flag. You can see that right here. A bull flag right at this volume pocket. It's right at that supply level. And it's another name that took the grunt of the beat down. And my target on this is 165 by the May expiration. Current price is 133. But I love this bull flag at the supply level. We break through that. This is my target way up here. These volume pockets up here after these gaps. That's what I'm looking at on Honeywell. Last up is Lockheed Martin. Because no matter where we are in the world, as far as like the global atmosphere, defense is always essential, period. And I believe it's more so essential in a fearful world. They also landed a $5 billion contract this week, but this obviously wasn't this week. That was the week of April 3rd. But so they landed that $5 billion contract this week. As far as the chart goes, it's pretty similar to Honeywell. We have this daily bull flag busting through supply right here. And my target up on this is this little congestion area where we had this bear flag coming down. That's my target by early May, and that's 490 on Lockheed Martin. And then as far as streaming goes, the only really name I'm looking at is Netflix. because it's best of breed in the sector, and it's showing relative strength to other names like Roku. Like Roku was having some tough times. Netflix was still strong. As far as the chart goes, we have another daily bull flag into the into this daily downtrend. But I think we can see all-time highs by the May expiration as well. But this is not a name I swing because the option premium is just too expensive. This is a name we trade intraday. I actually traded intraday on Thursday. I traded this name intraday. So I like the name as an intraday trade. The options move great. Not something I'm going to swing because of the amount of premium in them. But that's just the name that I like as far as the streaming space. But I'm only going to day trade this name. I'm not going to be swinging this name. All right. Let's get into setting up your charts, your daily charts for swing trades. Actually, let me pull up something first. Let me pull up Zoom. Just because I traded this name last week and I want to explain why. So, I posted in obviously the altitude room. And since I'm gonna post this on YouTube, I'm gonna have Ben put this on his Twitter. What up, all my Twitter people? I'm still in fucking lockdown because fuck Jack Dorsey. I've got one email back responding to my claim, in I think like 18 days now. There's been one, and they said they're investigating because I didn't violate any terms. It's just the phone number on my account has changed, so I can't verify myself. So I've emailed them, and I'm waiting for them so they can actually just change the phone number on the account so I can have access to my account again. So that's why I'm still not on Twitter. But anyways, here's this Zoom chart, and what day is this? April 7th. So April 7th, I posted this chart. Obviously, these two green candles were not here. I posted this in the room, and I bought, where did we close? Around 114, 113-ish. So I bought some 125 calls at the close on April 7th. And my reasoning was this. I had this demand level right here, this volume pocket, the point of control line. This red line was 113.16. We closed right above that. We came down, we defended it, and we literally closed right above it, right there. We held that level. And my thinking was that we were going to come back up to this supply zone here and here so they could build out a head and shoulders. You can see this ellipse. I actually put this ellipse on the chart on April 7th, telling them that was my target. And so actually the next morning we woke up and we opened here obviously, but we ran in the first hour up into my target at the 126 level. We ran right up there, and I think we had the Zooms at 115, and we ended up selling them for like 380 that morning. And then we sold, and obviously it came down, and we fought back up there again on Thursday. But I'm in no position on that. But this just shows how I'm using the supply and demand in these volume pockets to take these overnight and swing trades. And in a minute, I'm gonna open a blank chart. I'll use Apple, and I'm gonna show you how I set it up, what's on my chart, what I'm looking for on a blank chart, so you guys can be able to set these up yourself, like without having to ask me. Let me just pull that up. Let's get started. Let's do Apple. Apple. All right, let me zoom this out, and we can get started. All right, so first, to set up your chart, I have the stow on here. I actually don't really know why. I don't really use the stow, but the stow's on there. But so you're seeing, most of you guys use TradingView, so just empty your chart. Take everything off. You don't want volume, you don't want MACD, you don't want any moving averages. Take all of that shit off, and you're going to put up the VPVR. This is basically the volume by price, the amount of shares traded at certain prices. That's what the VPVR is. And when you set this up, you want to go to your inputs, and your row size, you want to put 1,000 on the row size. If you don't put a row size, it's not as precise. You'll just get big rectangle blocks that are about an inch big, and it doesn't really show you the actual price. So if you want to change the row size to 1,000, that gives you a more precise look at where these shares were trading. And now once you have that set up, and also it puts in this red line, which is a point of control, that shows you the share price where the most amount of shares were traded. The most volume happened at that certain price. That's this red line right here. That's the point of control. So as far as setting up your supply and demand levels for your swing trades on this, you have your VPVR here. You're still going to look at the candles like I do on my 15. Obviously, I'm looking for congestion. I'm looking for support and resistance lines. But I'm looking for that to line up with these volume pockets. So right here, let me just start drawing. I'll draw this big demand level, the point of control line, this big volume pocket right here. Right here. So I'm going to take this, the rectangle tool, and I'll take it from the top of this volume pocket to the bottom. right there and drag it across to right there. So I'm doing that. Obviously, Apple, it came through, it went through the point of control, right through that supply level. So this actually looks good to upside for me. Going into next week, I'm looking at this for upside. And the next thing you're going to draw is where are we at currently at the price. Look at this volume pocket. Almost the second highest. So we're going to draw a rectangle right here. And this actually coincides with this candle. With this long, obviously we fought up. This candle right here, look at this price range around 266. That's where a lot of volume was traded. So we're going to make us a little level right here. Come across to right there. That was our first supply level off of this demand. Once we got through this demand, that was going to be the first point of resistance. Obviously, we gapped up, and what did it do? It rejected that supply. There was a lot of volume there. They needed to sell down that. And then once they sold it down, it took us 2 days consolidation. We have to chew through that supply. This is a bunch of volume. There's a lot of shares traded there. So there's going to be a fight at that level. And we chewed through it. And actually, this the Thursday candle, this is a fantastic candle. We gapped above this supply level. We actually came down. We tested it. And then the buyers came in and they defended it. And we actually closed in a hammer. It's kind of a doji, but close to a hammer above this level. That's something I love to see. Like, if I would have saw this on Thursday, I might have taken a swing long over the weekend on Apple because we hammered over this resistance or this demand. We held it. So now I'm looking for the next upside. To look for the next upside, I look at the first level resistance. Obviously, right here we had some resistance. Right here we fought and dojied, all at this price around 277. And then if I'm going to look, why we use a VPVR, let's look to the left. Oh, right where my hashtag is, look at another volume pocket. There's resistance right there. There's the volume pocket. So that is going to be my next target on Apple. Right in here. This is a perfect supply level and resistance right there. Basically the whole length of this candle. And that is around 275 to 277. Currently we are at 268. That is where I would look to long Apple here and target that level right there. That 275 to 277. That's the level I'm looking to target. And if we got there, if I was long, I would trim my options. I would sell there and see how it reacts here because there's a good chance that we could reject. If we did reject this level, I would look to buy puts back to test down into this 268 level. But if we break through this, then the next level we look at is going to be our next resistance, which obviously you know how I make my 15-minute candles on SPX. We look where there's congestion, where the price has gone through more than once. Look at this close here. It lines up exactly with this close here. That's the 293 level. That would be my target if we get through right there. Bam. This is how I'm setting up the daily charts. You're using the volume by price right here. That's how you're creating your supply and demands and your targets. And this is how we're basing on the swing trades. We want to see it get through if we're going upside. We want to see it break through and hold that demand level. Then we target the higher side. If we like, actually, here's a good example. Say it's going the other way. I have a rejection because obviously we can't reject this yet. But look, it shoot up. We went through this supply level. We went through it. And then on this day, we broke through that supply level. It came all the way down. It's rejecting. They're not letting this come through. They're selling it down back into this supply level. This candle right here would have been a swing short. We broke through the demand. We closed back in under it and an inverted hammer. The close on this day would have been a swing short. And look what it did. We gapped down through that demand level. That's what we're looking for. And so right now, obviously, you saw me make this chart. This is how I'm making it. I'm looking at Apple right now. It's at 268. I like this long. My stop would be 265 back down here. But my target on this would be 275. And that's how I'm doing these swing trade setups. Again, me and Ben are going to try and put it out monthly. And we're going to pick names that we like for monthly swings because there's a lot of people that can't be in the room all day. And when me and Ben are taking our quick intraday like day trades, some of them miss it. You guys have your full-time jobs. Obviously, well, if you still have your full-time job right now, congratulations because half of my friends are on unemployment. But we're trying to put out other stuff other than our real quick like intraday like scalp trades that I know most of the members like really love because there's some good movement during the day. But this is for something that you could sit. You don't have to really worry about. I mean, you just put your stop in and let the trade play out. You're not looking at every tick. You're just letting the trade play out based on these supply and demand levels. All right, guys. Hopefully this video goes through because I'm really not making it a third time. But I will, well, again, cheers, Twitter. I miss you guys. And out to you guys. I will see you in the room later today. Cheers. Happy Saturday. Stay safe out there.